consumer confidence continues to be pretty low. This is actually a surprising number, 55. If you go back and look, historically, let's see here. We run this number across this current consumer confidence number, run it back to the early 1970s. You only have a couple points that are, below this number. The early 80s when we had double digit inflation, 12, 13% inflation. Um, you had a number here with, barely lower with the Great Recession, which was the worst recession in 70 years. 2011, we had a number that was a little bit, call it about par with that. And then what we had here in 2022, this was kind of a shock. 2022 was a worse reading than 2020. Okay, this 2020 was COVID, so here's that reading there. And 2022 was the worst reading. And then that was a lot when you started hearing recession fears and economists started to jump on the bandwagon of a recession's coming. And we did have two negative quarters of GDP growth, but official recession was never called. And then 2023, everyone thought the economy was going to be in recession. Not everyone. 80% of economists out there were polling a recession was most likely in 2023. It never came, and then the market bounced and recovered. Consumer confidence recovered, but now we're at a little bit, low levels. And given the political environment, what's going on with tariffs, the market run up could be scaring people, but we're at some pretty low levels here. This is, they call this a contrarian chart because a lot of times when you see these low consumer confidence levels, historically, these are the best times to invest. And so let me see, I have a message here. Okay, and I do not. So let me address that in a minute here. Is the second installment for the property tax a question? I'll address that at the end here. But I do not have an update on that. But yeah, when you look at this is called a contrarian chart, where usually when you look at this and you say, okay, these numbers, consumer sentiments at lows, historically after those low points, it's been a very good time to be an investor, and the markets have done extremely well. You can see at the trough point, if you bottomed it out, the average return 12 months after these trough points has been a return of about 24%. Okay, the average return at the peak points 12 months later has been 3.9%. So when consumers are feeling the best, all these points up here, the next 12 months haven't been the best. It's been when the consumers are not feeling as confident, these low points, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's when the stock market returns are the best. So again, not a guarantee. So not something that's going to happen, 10 out of 10 times. And, you put all your money in stocks because you think the market, sentiment's low and you're going to have a great return. That'll be the 10% or 20% of the time that it doesn't occur, right? But again, this is just a contrarian chart just to give a pulse on what